Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
That's why there has been really a sense that investors cannot afford not to be exposed to some of these trends. Moving into semiconductors in particular, there seems to have been a particular surge in semiconductors, and this was a trend that's been picked up by a few commentators this week. The supply chain disruptions in semiconductors have given them, of course, pricing power, and whereas there isn't much, they're not really discretionary purchase for the demand side of the equation there. Their share of the S&P has quadrupled since ChatGPT was launched, and that's again another notable factor in terms of just where the mood music and I suppose the heat map has shifted to when it comes to equity sectors. And their earnings forecasts have kept pace again. Again, part of that regarding just their pricing power, a somewhat inelastic demand for them regardless of the price. So this would be, again, part of that artificial intelligence lighting up every part of the semiconductor supply chain. Looking at the US relative to other markets, it is now again the case that we are back to US exceptionalism. We mentioned that before, whether this was a reaction to the Iran war or whether this was in fact now the norm, and that any aberration would any other stock market outperforming the US would only be an aberration. If we are comparing the MSCI EFE US and emerging markets index, they have all done somewhat quite well since Liberation Day, but the US has very much outpaced. The emerging markets have seen the most volatility since the war. They had been at quite a high in the run up to that. We do know that they are most exposed to the energy coming out of the region, and also perhaps a little bit more out there on the risk spectrum. So when risk was not risk off, but at least risk was returning to more familiar assets, geopolitics clearly did not shake the demand for US equities, but perhaps it shook the confidence in countries outside the US. Other comments that actually these are slides from last week, just in terms of the why US remains exceptional.